referring back to the Putra Heights. If they don't have any insurance coverage, then what's left would be how else can they get their compensation. On one way they can do it is to claim against the person who has caused this, right? But again, that is a very long, drawn-out legal process. Unfortunately, I think the policyholders will probably have to initiate the claim under their own policy first, and let's see how the rest of it turns out. Basically, there are three types of motor insurance. The first one, which is comprehensive, that provides the widest in terms of cover and will cover against theft and fire. The second one is third-party fire and theft. So it's quite clearly, it states what it covers. And the third one, the least of it, is just third party. And the third party cover does not provide any cover towards fire against, to the vehicle. Home insurance, most people will purchase a homeowner. Homeowner is a more comprehensive cover, so you don't really have to worry what you have purchased or what you have covered. And householder is quite similar to homeowner, except the householder covers the content in the building. That will include loose items such as furniture, television, maybe your bed, whereas the homeowner covers the building and its fixtures. In the Malaysian context, right, most home buyers would take up a loan, and most banks will normally have the minimum required home insurance, and that's quite a wide cover. That will provide cover for fire and explosion. For condominiums, largely they come under the Strata Title Act, and the Act requires that the condominium management to arrange the insurance for the entire building. But you have to be aware that some of these policies as arranged under the management corporation may not necessarily cover everything. They only cover up to the common property and whatever fixtures that is included in its original contract where the buyer has purchased the home. If you have constructed your built-in cabinets, furniture, televisions and all this will not be covered by the insurance that is taken up by the management. So as we can see, many of the homes were affected. The same thing, if you have records still to evidence the cost of all your purchases, either for your building or the content, that'll be good. I think in most cases, you may not already have kept them. That's not a problem. The insurance company normally will send an adjuster over and they'll make an assessment. Most important is do not proceed with any repair or replacement first. Keep whatever that is damaged. So with all this evidence being preserved, it will make the claims process much easier. In terms of amount of what you can claim really depends on the extent of the damage, whether it is considered a total loss or a partial loss. If it's partial, then what they will do is they will pay for the repairs to as close as it can be, back to its condition just before the loss, right? But if it's deemed as a total loss, then what the insurance company will pay either based on the market value of the vehicle at the time or based on an agreed value. For properties, it's largely dependent on the reconstruction value of the entire property. So again, it's the same thing. If it's a partial loss, the insurance company will pay to repair. If it's a total loss, then it will pay up to the value of the policy itself.